When price goes down, yield goes up. And these 7 dividend stocks have a current dividend yield that is at least 21% above their 5-year average, with one as high as 77%. You're going to want to stick around for that one. And now, before we begin, a word from the guy reading this. Hey, what's up? I'm Russ, and as I said, I have 7 dividend stocks for you. And some of these you may not be aware of or too familiar with. So we're going to put them on your radar, get you caught up with 7 dividend stocks that have at least a 21% current dividend yield that is above their 5-year average. And hey, if you want to check out what's going on with the portfolios, head on over to dapperdividends.com and click on the My Portfolio tab, and you can see what we got going on there. First up is J&J Snack Foods Corporation, ticker JJSF, which is an American manufacturer, marketer, and distributor of branded niche snack foods and frozen beverages for the food service and retail supermarket industries, and has brands like Icy, Slush Puppy, and makes products like Sour Patch Kids Ice Pops in conjunction with Mondelez. J&J Snack Foods is up 4.59% the past year, and the current yield of 1.58% is 21% above their 5-year average of 1.31%. Now, over the past 10 years, their compound annual growth rate is 18%, with a dividend growth streak of 16 years, as well as uninterrupted dividends for 16 years as well. Old J&J Snack Foods trailing 12-month free cash flow payout ratio is 184%, but as you can see, it says not normal, and this is due to 2/3 of their revenue being affected by the pandemic shutdowns, and you can see they're usually well under 50%, which I think will return to normal as they have a stellar balance sheet. Their last dividend increase was 10% to $2.53 in May of 2021. Now, when I was a kid, I loved riding my bike with my friends to the convenience on the corner of 26th and East Avenue in Berwyn, Illinois, to get ices. So if you ever wanted to own ices, this would be the company to do it with. Next is Clorox Company, ticker CLX. They manufacture consumer and professional products. We're all aware of Clorox, but many people aren't aware that they have brands like Burt's Bees, Fresh Step, Hidden Valley Ranch, Kingsford Charcoal, Casey Masterpiece, and Brita. Now, Clorox is down almost 21% in the last year, and their current dividend yield of 3.12% is about 23% above their 5-year average of 2.54%. Over the past 10 years, Clorox's compound annual growth rate is 9% as they head toward being a dividend king with 44 years of growing dividends, as well as 44 years without a dividend reduction. Do be aware that their trailing 12-month free cash flow payout ratio is 97%, which we covered in a recent video, and their last dividend increase was 4.5% to $4.64 in August of 2021. So it's going to be a bumpy ride for a few years because of the supply chain disruption, inflation issues, and they're going to pull through. We believe in their management, so us believers are strapped in and ready to take that bumpy ride with Clorox. Next, we have TROW Price Group Incorporated, TROW. They are an American publicly owned global investment management firm that offers funds, advisory services, account management, and retirement plans for services and individuals, institutions, and financial intermediaries. TROW Price is down 12% in the past year, and their dividend yield of 3.38% is about 30% above their 5-year average of 2.60%. Now, over the past 20 years, their compound annual growth rate is a very healthy 14%, with 35 5 years of consecutive increases and 35 years without a reduction. Their trailing 12-month free cash flow payout ratio is only 30%, and their last dividend increase was 11% to $4.80 in February of 2022. I think it's really interesting that they're dropping because they're such a strong company. They're not a company that we outright own yet, but I am looking closely at TROW price, and I think this pullback has been because their last couple quarters of sales have been declining, but they're still very, very good. Let us know if you've heard of CAS Information Systems before. Ticker CASS. They are a leading provider of transportation, energy, telecom, and waste invoice payment and information services. CAS's stock is down 3.75% the past year, and their current dividend yield of 2.73% is 33% above their 5-year average of 2.05%. The past 20 years, CAS has had a compound annual growth rate of 10%, with 27 years of dividend growth and 27 years of uninterrupted dividends. Their trailing 12-month free cash flow payout ratio is 43%, and their last dividend increase was only 3.7% to $1.12 per share in October of 2021. Super duper boring company that, man, they're not going to light a fire under anyone to run out and buy them. But if you're trying to accumulate and build wealth, what a great company that could help you do that. And hey, a 10% 20-year compound annual growth rate is really solid and just a super boring, solid company. UGI Corp, ticker UGI, is a natural gas and electric power distribution company with extensive operations in the United States and Europa. UGI owns AmeriGas, which has powered our grill for many years, which is the largest propane marketer in the United States. UGI's stock is down 3% the past year, and their current dividend yield of 3.59% is 36% above their 5-year average of 2.64%. Now, over the last 20 years, UGI has a compound annual growth rate of 7%, and they have been increasing their dividend for 34 straight years, and they have not cut or reduced that dividend as well in 34 years. Their trailing 12-month earnings per share payout ratio is 50%, while their last increase was only 4.5% to $1.38 per share in May of 2021. I love that companies like UGI and Duke and Consolidated Edison, their projects are guaranteed a rate of return by government regulators, so it's really not going to experience crazy growth, but it is, again, a super stable, solid company, as you see by them increasing that dividend for 34 consecutive years. UGI Corporation, take a look at them, see if they're right for you. Next, we have ATRI Corporation, ticker ATRI. They develop, manufacture, and sell products for fluid delivery, cardiovascular, and ophthalmology applications in the United States, Germany, and internationally. Now, their stock is up 5.29% the past year, and their current yield of 1.17% is 39% above their 5-year average of 0.84%. Atrian's compound annual growth rate over the past 10 years is a ginormous 16%, and they have been increasing the dividend for 17 years as well as 17 years without a reduction. Their trailing 12-month free cash flow payout ratio is 64%, and their last dividend increase was 11% to $7.80 in August of 2021. So if you're like me and you saw that over $600 a share, you're like, whoa, that's a lot of money for a company I've never heard of. But they have 1.8 million shares outstanding. So much like Chipotle, they don't have a lot of shares to go around. So that really pushes the price up because people still want them.
I've never heard of them.
Of course you have.
What do you think of ATRI Corporation. Had you heard of them before this video? And lastly is PRGO Corporation, ticker PRGO, which is an American Irish registered manufacturer of private label over-the-counter pharmaceuticals. Now, while 70% of PRGO's net sales are from the US healthcare system, they are legally headquartered in Ireland for tax purposes, which accounts for 0.60% of net sales. Over the past year, PRGO is down 14.5%, and their current dividend yield of 2.86% is a whopping 77% above their 5-year average of 1.62%. Over the last 10 years, their compound annual growth rate is 14%, with 17 years of dividend growth and 17 years without a reduction. PRGO's trailing 12-month free cash flow payout ratio is 66%, and they pay out $1.04 annually after their latest increase of 8.3% in March of 2022. So in a nutshell, what PRGO does is they create pharmaceutical products that are ready for over-the-counter use, and you, if you're a business, you buy that from them. They put your label on it, they put your name on it, and you're ready to go. They ship it to you, you put it on your shelf, and hey, you look like you're in the pharmaceutical business. Pretty interesting company, and they are one that I had not heard of before doing this research. How about you?
Are you talking to me?
And speaking of you, I'd like to know what dividend stocks you're looking at. And if you'd like to get caught up to speed on one that I am looking at and I'm waiting patiently, click the little box next to my head and get caught up to speed on 3M and what's been going on with them. And if you click on that and go over there, I will see you over there.